What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 1st of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to discuss. We're going to be diving into Bitcoin's price, not only trying to take a look at some prediction models that are out there at the moment, but also take a look at some data science models to really give us a clear perspective as to where we are in the market at the moment. And outside of that as well, we'll be diving into traditional markets and talking about the Fed's decision to yet again cut interest rates. I wonder why they're so eager to make capital cheap at the top of a market cycle. Well, we'll talk about that later on in the video, but I want to let you all know real quick that the video is sponsored by eToro, and eToro is a social trading platform. So for those of you who don't know, you can not only buy a wide range of top-tier cryptocurrencies, but along with that as well, you can buy into pre-built portfolios, all built within the eToro platform. And outside of that, it's important to note that eToro is a social platform. So you can engage with other traders across the platform and check their portfolios real time. So if you want to get registered today, you can start off with a $100,000 virtual portfolio and test out your trading strategies. So I recommend you guys give it a try. Anyways, let's go ahead and take a look across the board on the market. We've got a lot of exciting things to talk about, guys. We can obviously see some plays have started to ramp up here. We're still seeing a general no trend scenario over the last week. And the reason for this is obviously as Bitcoin is starting to cool down, altcoins are starting to gain a slight bit of dominance back in the market. And we're starting to see again Bitcoin cool down and really forming what to many bulls might be seen as a bull flag. Now, again, everyone's going to view the charts different, but I have to say Bitcoin's price holding above the $9,000 mark has been very favorable to me. Now let's go ahead and take a look here. We'll take a look at the yearly mark here for market cap. We can see here not much change here over the last few days, declining a little bit as we've been seeing steadily lower and lower levels here on Bitcoin, but again, still holding above the big even at 9,000. We can see here as well, the Bitcoin dominance that we had gained really over the last few days back last week. We've started to see kind of falter down. Altcoins regained some of this dominance, but still well above where we were back just about a week or two ago. Now, let's go ahead here, take a look here on the daily chart, get an idea of where we are in the sense of price, right? So we can see here that over the last few days, there hasn't been much going on. And I do want to say that I appreciate you guys' patience. I've been really busy here in Vegas. No, I have not been partying and, doing all kinds of crazy stuff. I've actually just been really networking with people. There's a ton of people. There's really two conferences I was going to, the Litecoin Summit and then the World CryptoCon. There's been so many amazing projects out this way. But during this time, what's really fascinating is I didn't hear a living soul at the conference talk about any of this. That was a really interesting thing to kind of share with you guys that I wanted to talk about, which is that no one right now is really caring about the short-term price action. Anyone who's really here for the long term. And I think it's a great perspective thing to not see people flashing their portfolios like in 2017 and saying, oh, I'm in this project, this and that. We're getting towards a much more serious market, and we're seeing applications being built around this market of new emerging asset classes. So anyways, I'm rambling on. Just thought I'd share that with you guys because I really try to share a little bit of the perspective I gained from these conferences, and they're great events if you can make to local meetups, whatever. But anyways, taking a look here, this is what generally many people would see as a bull flag, and all the things check out. An immense breakout in price after a correction of some sort. And then after that, seeing a slow sell-off here where we're setting lower levels, lower highs and lower lows here, right after a dramatic 2 or 3 day shift to the upside. And each day is seeing lower counts of volume across most exchanges, right? And we're taking a look here at Coinbase. If we take a look at Bitstamp, we see a very similar trend where the volume is declining. This is exactly what you want to see. And the reason why this is a bullish thing is you're not only holding the vast majority of price action, but it's showcasing that there's not the immense sell side pressure that there was on the buy side. And you can see that not only materialize through price, but in the volume as well. So again, I know I usually don't take a look too much at the daily chart. Just wanted to showcase this to you guys. This is generally a bullish trend, which is good to see here for those who are long for the greater cycle. Now, I noticed as well, if you were to take the generalized support here and apply it here on the chart, you can see this is where we generally hit resistance. And I think it's going to play as a key level of resistance if we start coiling up here to the upside and continue the momentum. But again, you guys know we don't look so much on the daily time frame or the hourly. We look on the weekly time frame. And so far, things are looking more optimistic. We haven't gotten the trend shift yet. Two of our lines have not stepped into the stochastic. We've got one line. We need both lines to get here into the purple zone before I get optimistic. I would like to see a cross on the MACD or the squeeze momentum indicator set a higher week here. I need at least 2 out of 3 of those for me to be confident that we're really going to start carrying up into momentum for this next portion of the cycle, right? Retesting back up to not only the previous highs for this year, but to the previous highs, the all-time highs of 20,000 and continuing higher. Now, there's a few things that I want to take a look at just to provide some clarity here. One of my favorite data science models here is the TwoYear MA Multiplier. Now, this is on Look Into Bitcoin. It's a free website you guys can use. I did a video talking about some of these data science models a while back, but this one is probably one of the more simple models, and it's basically taking a 2-year moving average on Bitcoin's price, so the close of the last 2 years of daily closes, and it basically multiplies that value by 5 and creates a secondary line, which is the red line you see on the chart. And it's a very simple indicator that shows us when it's a decent time to buy Bitcoin. It's usually when we have price below here, when we have the green kind of haze or zone that starts to split that divergence between the blue line and the green line. And also when it's generally time to start preparing to maybe take partial shares or be concerned that we might be entering towards the peak of a market cycle. And that's here in the red zone here between the red line and the blue line, right? So what's interesting here is not so much focusing on that green zone because we didn't actually get there, but interestingly enough is that with each of these cycles, once we had dipped below here, we actually come down in many cases to test back onto and build support on that 2-year multiplier, right? So take a look here. We can see here we had support here on the 2-year moving average, we had support on the 2-year moving average, and support on the 2-year moving average. So as we have done in previous cycles, we've come down to make support on that area that was, for example, the level that we would break through and we would find to be an oversold region, which is, of course, where Bitcoin was at 3,000 to 4,000, right? So again, this is repeating history, guys. And to be fair, we have to consider the fact, and I always try to drill this, we had a massive breakout, an absolute FOMO rally out of 3,000 to 14,000. That shouldn't have happened as quick as it did, especially at the scale of the market size that Bitcoin's at now. I mean, compared to these rebounds, it's so much more significant, right? So to think that we had to pull back down to this level, maybe have a 46% correction or 47% correction like we had, it's understandable. It's absolutely understandable. But this is not the time, in my opinion, to be bearish in this case. I'm definitely excited to see where markets are going over the next few months. There's another interesting model here that's been getting a decent amount of traction here that's talking about a 12-month forecast for Bitcoin. And this is coming from an individual called Phillip Phillip. I hope I'm pronouncing their name right, or maybe the acronym stands for something. But the general layout here looks actually quite favorable. This is probably one of the more kind of patient and bearish kind of narratives, even though it's going up, in the sense that, this is going to take, a good 6 months before we really start to see price climbing back up the previous highs of this year and starting to test back up towards 20,000. But it uses a combination of keeping in, again, the time frames that I like, the weekly moving averages, right? And starting to see that we might actually, if you take a look at the kind of ghost pattern they have here, the candle patterns they're using for these gray lines to resemble future potential price action, they're using this general range here. The general price action we saw between here in November all the way up here towards July. So this repetition of where we had a reaccumulation, in this case, price went up. We're going to come back down, make support on the moving averages as the 50-week passes the 100-week. And in this case, we could start to see price come back up, make a cup in this case, back to the previous highs, and rally up higher. I think it's a really interesting model. It's a practical one. We know that once Bitcoin is going to get back past these highs, past 20,000, it's the beginning of the next cycle. And at that moment, it's a very, very tricky game to try to trade the market and stuff, when in reality, that this is probably going to be a 5x or 10x multiple from the previous highs in this case. I think it's going to be a 5x and go to 100K, but that's just me personally, right? I think this is going to come at a time where we obviously have a lot of exciting things going on, and that is what's going on in the world of monetary policy and the traditional financial sector. So if what was going on in repo markets was not concerning enough to you guys, it surely is concerning for me. I'm interested to know who in the world, whether it's a government or it's a group of people, had to dump hundreds of billions of dollars of treasuries onto the Fed, supposedly in the short term, but I think this speaks to what's going to be a much longer term support of, or a minor form of QE in this case. We have to ask, in this case, why is the Fed continuing to cut interest rates, right? This is another key thing. It's one of the two major tools of monetary policy. And we were really only just a few months ago at 2% and above, which is still extremely cheap in the grand scheme of things historically. But it started to hit towards a resistance range, a general line, a descending line we've seen over the last few decades in interest rates over the last 50 years since the 1980s. So why is the Fed having to cut this? Well, it's obviously to keep the expansion going, to keep equities and other assets stimulated. And a good way to kind of showcase this and show that I'm not just making this up, as we've talked about, the stock buybacks have been what kept equity markets going. Cheap liquidity has kept this thing going. A good example of kind of materializing this within data is taking a look at the composition of corporate debt, right? Taking a look at how much corporate debt there is out there as a percentage of GDP. And this orange line does a good job of demonstrating this, right? So we find in times where there is high exposure to corporate debt as a percentage of GDP, then in this case it shows us that it's usually time for a recession. There is overexpansion, there's over leverage in the economy, whether that's through financial corporations making investments or companies who are making investments, and factories and buying up retail locations to have stores, whatever it may be, right? Anything to expand, or maybe making acquisitions in this case, borrowing capital to buy up competitors or companies that are going in, or startups that are leading in new industries that they want to have not a monopoly but have market share in, right? Well, we can see here that we have gone back up to all-time highs in corporate debt as a percentage of GDP. And there's actually some views on if you really take a look, it really depends on what data set you're looking at. Some are well beyond the previous levels of corporate debt as a percentage of GDP. But the fact of the matter is we're getting at a range that was very similar back to 2008 and 2009. Now, many people would point back to the past here, right? We set higher levels. Debt is playing a larger role in economic expansion each and every time. So it could be that we still have a little bit of a ways to go, but it showcases that corporate debt is what's fueling this expansion. Cheap liquidity is what's fueling this. And many might ask, they don't see the kind of economic expansion going around as we talk about, the real economy has had some improvements over the last few years, but we're not seeing the real recovery that I think is being materialized with this amount of corporate debt. I mean, what are companies using this cash for? Well, they may be using it in the real world, but what this is doing as they are increasing the amount of debt as a percentage of actual economic productivity and development that they are materializing from that capital, a lot of that additional cash that the companies are finding on their balance sheet, whether it's the borrowed money or it's the cash that they should have been putting into real investments, is going into the stock buybacks. It's going into assets. I'll beat it like a dead horse, guys, but it's true. It's why the Fed is doing what it's doing. And until we understand these very simple principles, right, the incentive structure of the Fed and the people they're serving, right, the corporate world, in this case, the financial sector, we have to understand their very simple interest is to keep that expansion going. And they will push that debt as far as they can as a percentage of GDP until it gets too ridiculous or until it starts to have diminishing effects on the dollar to severe degrees where it really starts to question the dollar as a reserve currency, right? They're going to push it as far as they can. But they're at a war with other central banks. They're at a war with other currencies and bonds. And in their case, well, the United States is treasuries, but different governmental bonds. And it's a very interesting kind of range of incentives that the Fed has to keep in mind. They have their incentives to keep the expansion going, but they have to factor in a lot of other things to where they don't inject too much easy and funny money into the economy. Anyways, outside of that, in the sense of news, one thing I want to talk about in the sense of crypto markets, BitMEX had a big mishap today. Didn't hear about it until I had some of the people at the conference who, some of my friends in the space who do trade on BitMEX, do trade on some of these platforms, had a huge expose on the amount of emails or the emails of the accounts that were registered in BitMEX. Long story short, you've probably gotten caught in this yourself where someone is doing basically a mass email and they don't do a blind carbon copy in this case, which exposes all the emails. I know people have done that to me before unknowingly, but in this case there was supposedly an error in their mass email system when they were sending an email out to users, and it basically listed out every single email for the users of the BitMEX platform. So a lot of people have been going through and restructuring, and anytime this happens, guys, whether you trade on BitMEX, I don't personally do not trade on margin trading platforms, or if it's on a normal exchange, no matter what, it's good practice to change your password, and along with that as well, it was set to set a more secure password. If you don't already have one, you should have it in the first place. But to also as well see if you can register a secondary account. In many cases like this as well, they'll let you change your email, things of that sort. So again, a very important thing to take into mind. If you guys do have an account, keep this in mind and take the proper security measures. Anyways, guys, that is it for the video. Again, I appreciate you all and your patience over the last few days. I usually don't do as much conferences as I used to. I know in 2 weeks, I've got Singapore coming up, which I'm very excited about. I'm excited to go back. It was where I did my first conference. But outside of Singapore, I don't really have too much planned for the rest of 2019. So I'll be heading back to making content when I get back home. I'm flying out tonight. Vegas has been a really entertaining place. There's so much going on. It's a bit overwhelming in that case, but I've had a fun time. I did play like 1 or 2 games of blackjack and stuff, put in like $50 or so, and it's fun. It's a cool place, and if you are in the States, recommend you make a trip out if you do like kind of the entertaining shows you can go see, and just if you have some conferences in the area for something related to crypto, there's a ton here for crypto. Then definitely make it down. And another interesting fact, last thing I'll say before I ramble on for too long, is I actually found out that the largest viewer base as a percentage of population for the Data Dash channel is right here in Nevada, out of any state of the United States, which is pretty interesting. It makes sense. And I think it's for 2 reasons. I think it's because obviously crypto allures a lot of people as a new market, as gambling and speculation does in the casinos and the kind of atmosphere of gambling within Nevada and Las Vegas. But I think there's also something extra to it. I know, for example, my brother and many people included who used to do online poker, they basically use Bitcoin as a means to actually gamble online and everything. And I thought, wow, I didn't think about it. That's probably another reason as well, in this case, for people who are doing online betting and things of that sort. So I don't know, maybe you guys might have a different theory to it. I'd like to know what you all think. And what do you think about the things we talked about today, right? There's a lot of interesting topics, but I've rambled on enough. I made up for the last few days. I hope you guys appreciated it and enjoyed it. But I will be back home tomorrow. Might be a little bit jet lagged, a little bit tired because it will be a red-eye flight. But I'll see you guys in the next video. Stay tuned.